Good morning, gang. Good morning. Welcome to today's Bitcoin update. First things first, remember, everything that we discussed today is not financial advice. It's for educational purposes only. I'm not a financial advisor. Pretty obvious. These are just my views on the market. So let's follow on from where we left off last week, shall we? First things first, we're looking at the monthly chart, and it's still in a downtrend. No change. We're still within this downward sloping channel that we've been talking about for a long time now. And until we get out of this channel, like we've said many times, there's no reason to start looking macro bullish. Same again on the weekly, no difference. One thing we can note though right now is we're starting to get close to the outside of this channel. So whether we get to this channel, we break out of this channel, backtest and move on, or we continue down from here, who knows, but let's wait and see. So that's what we're looking at the moment. Obviously on the larger picture, we're still looking at this as our high time frame range, obviously from the highs up here around 65k down to the lows down here down at 29k. As it stands right now, for me, this would be the biggest resistance on the chart, but as we've said last week, every man and his dog is looking at this level. So typically what happens when every man and his dog's looking at one level, we'll either do one thing, we'll either front run it and move down, which obviously we could do from here potentially, or failing that, we blast up straight through it and either reclaim the lows and we got a long within this range, or alternatively we blast straight through it, swing failure, big deviation, back out and then back down. So obviously that's the high term view right now. Now if we zoom into the daily is still only just, but still in an uptrend. What do we mean by that? Well, obviously we're making high highs, high lows, high highs, high lows, high highs, and so on and so on. But obviously it's looking weak, and we discussed this last week. It's looking weak because every attempt to break out of this range is just getting rejected. So the breakout traders are having a real bad time right now, and the bears are having a great time. So obviously when you get up to your range highs, it's not the time to be looking for longs, even if you think it's a breakout. A breakout trade has got a very low hit rate unless you get a confirmation of trend continuation. What do I mean by that? Well, you continue to make these high highs and high lows. Obviously if you're breaking out of here and you're not doing this as a structure, then why are you trading a breakout? Because it's happened how many times? 1, 2, 3, and within this is multiple times. So let's not do breakout trading. It's just daft. Okay. As it stands right now, obviously to maintain this uptrend, this level right here, let's turn off the magnet. This level right here is critical. Because if we take out this low, then we're potentially creating a low, and then if this happens, then we're either looking for a lower high followed by a lower low, or alternatively this could just deviate back under here and then continue to make another higher high. So yeah, you know, you're going to get idiots that say, oh, you've got options for everything. Well, that's what you've got to do in trading. You've got to be prepared for anything. You know, right now I'm still short from here, I'm still long from here, and I'm still long from here. I've also got a small long on right now from yesterday's move. So it's all about hedging your bets. So all these positions I've already taken profit on. So if any of these positions now get stopped out, it's fine because I'm still winning. If the market then breaks down from here, well, happy days, this short continues. If the market then decides to pump from here, well, that short gets stopped out at break even, even though we've taken a profit on it. So therefore it's technically a winning trade. And then we let this trade, and this trade run. So regardless of direction, you still win, and that's the beauty of understanding how to trade a range. So let's take a look at this then in a bit more detail, shall we? Let's see what's going on. So first things first, let's look at the range itself. So this is the range that we're trading. This was the initial range that we were looking at way back then, which we're taking these daily highs here, capped here, and then we had a deviation, back in, deviation, retested the back of the range, and then we're kind of hovering around in this area. Now, if you're wondering what this tool is that we've got on right now, this is a what we call a fib range tool, and this is what I share in the Discord. And the beauty of this tool is it not only frames the range that you're trading, including your top, your bottom, and your EQ, but it also frames areas for likely deviation, which will be this level here and this level here. And as you can see so far, this tool has worked brilliantly. So if you guys want to know what this tool is and you want to use it, then come join our Discord. It's as simple as that. We'll happily talk about it. So obviously that's what we're looking at right now. Now we can make things a little bit more complex now. We're going to throw on a volume profile. We can see what's happening right now. Well, so far, price last night came back down, hit the value area high, little mini swing failure into the old value area, and now we're currently getting a little bounce. Does this bounce continue? Well, let's wait and see. But obviously that's the reason for the bounce here. There's other reasons too. If price does manage to get back into this value area, then obviously we'll be looking for the old range highs initially. If the old range highs give in, which is obviously this critical low on the daily right now as well, then you'll be looking down to the point of control initially. And below that, we've got the EQ, which is very close to the value area low. And that's what we're looking at on a volume and a range perspective. Now, is there other tools that we can use to help with this? Yeah, there is. Well, we can look at some high time frame SR levels. So right now, we're bouncing off the weekly. Down here by the point of control, we've got a fresh daily level, which has not been tapped yet since it was created. So therefore, in my eyes, that's a stronger level. Down here by the old EQ, value area low, we've also got this fresh monthly level. And then below that, it's not on the chart, but below that, we also have a daily level down here. So this whole region right now is the strongest support. So we've got this one. We've got this one. So these are my two regions at the moment that I believe are the strongest support on the charts. Now, does that mean that I'm going to blindly long these regions? No. I'm going to see if price reacts at these levels, and if it does react and then changes structure, then I'll be looking for longs. If price gets no reaction and we just nuke straight through these levels, well, quite simply, there's no trade. And we'll just hold on to our shorts a little bit longer. Okay, so this is how we're just trading it level to level, nice and simple. If price does come down to this level and gets a bounce, now bear in mind there's a possibility here that we've then broken structure. So therefore, we're not going to get greedy on these longs. We're going to play it, and we're probably going to play it back up to the old range highs, which is this level here. If it gets above that, then obviously we've got this whole region. If it manages to clear this, then obviously we're looking for higher. It's very simple, but obviously if this low is taken out, then you've got to take into account that structure may be changing. It's not confirmed as a change, for me, that is, on the daily. For me, we'd have to do this for the structure to change, but it's there. Got to be cautious if you are taking longs at this level. If it does get down there, obviously, if we bounce here, then happy days. Obviously, we've got levels above us. We've got this level here, which is part of the range fib tool. You know, above that, we've got these highs here, which again, is you struggle. We've not closed above these highs. We've even moved away from it and then back tested it perfectly before moving away. Okay. So let's talk about the lower time frame, shall we? And see what's happening. Let's get rid of these for the time being. Let's get rid of this fixed range tool. In fact, we'll keep this on. And let's zoom in to the 15-minute chart. Let's just get that volume profile up so we can see the whole thing. Let's remove this fixed range tool. And there we go. Right. So what's happening right now? Why did we bounce where we bounced yesterday? Well, we bounced at this weekly level. And as I was saying in the group yesterday, we were currently bouncing, as I posted that, which was at roughly 1:30 my time, British Standard Time. We were bouncing at the time here at the golden pocket. And this is what we're updating in the group. I was saying, if no bounce here, I'd be looking for those single prints to be filled from last week. Now, those single prints we were posting on Twitter We've posted it a few times on Twitter. So as we can see here, we're bouncing on this golden pocket. And if no bounce here, no strong reaction here, then we're looking for these single prints here to be filled in. And what happened after that? We got no bounce, price continued down, then we started to bounce on the value area high of this macro range that we've just been showing. So for me here, this was still no long. Why? Because I was looking for this weekly level here. And a little bit later in the day, I also posted, we're still holding this monthly open / value area high, and I'd like a liquidity grab to that weekly to finish off the single prints here. And look what happened. Obviously we had the FOMC meeting minutes, which then caused the rally up. Everyone got excited again, and in the end we came down to this weekly level down here, and we've had a nice bounce so far. Now for me this would take profit 1, and now my stops are to break even, so if price continues higher, great. If then I get stopped out, I don't take a loss. It's still a winning trade. Okay, but it was worth a scalp off this weekly level here, because that's what we'd already had planned out in the group. Okay, so that's what's happening here. From a resistance point of view, as we've discussed, let's zoom in a bit more. So obviously we've got this level here, which we've not managed to get a close above yet. In between here, we've still got this wrong one. Let's use the right one, shall we? We've still got this naked point of control, and this is front running those macro range lows. So we've still got this naked point of control, which, as we said last week, lines up quite nicely with the golden pocket. So it's something to be aware of, because this is a level that could catch people off guard. And why could it catch people off guard? Well, it's because people are looking for up here. People are looking for up around this weekly level up here. So that would be a great example of a front run to catch people off guard before dropping price back down. Either way, if you are long, this would be a good take profit region. If it blasts straight through there and gets no reaction, then obviously we're looking back up into this consolidation here, which in this instance we've got a fresh weekly that's never been tapped back up here. And this is also where ETH managed to get back up to. Well, ETH actually got a little bit higher, but very similar charts. But obviously ETH's shown a lot more strength now. You only have to look at the ETH BTC chart to see that ETH's the stronger of the two. Bitcoin's been relatively weak recently. Okay, so that's the update for today. Biggest levels on the chart to keep an eye on: this level here, and obviously this level here, which we've struggled to close above. To the downside, if this weekly gives way, then from a bullish point of view, then you don't want to lose this level. If you lose that level, then you're looking down to this point of control, and if you lose that level, then you're looking down to this monthly level / value area low. Okay, it's dead simple, just level to level. Don't overcomplicate things. If this does end up going, then we've got a fresh daily down here, and if that doesn't hold, which would be a swing failure pattern of this, and if we throw on our where's it gone? The fib range tool, and let's clear this up. Then obviously we've got these levels down here using the fib range tool to keep an eye on. So obviously these will be prime levels for a deviation of this range, and taking out these lows, getting everyone bearish again, and then you could wait for a reclaim back up into the range, and then you've got the long, and we just continue trading this range regardless of how long it goes on for. Yeah, it's a nice range here to trade. Okay, obviously if you guys want to learn along with us, you want to see these updates that I'm posting in real time, then the link to our Discord is in the description below. There's also links to our Discord on our website, and if you do want to join us on the website, we also have a education section where we've got over 50 hours of educational content, and that's growing. We're just about to start the Elliott Wave series as of next week, so if you want to join in for that and learn Elliott Wave along with all these other tools that we use, then yeah, feel free to join. Aside from that, guys, remember, nothing to do with financial advice. If you enjoyed today's content, hit that like button. Let's get Spitfire traders in the algorithm, shall we? And if you fancy it, then hit that subscribe button too. All right, guys, thanks very much. Speak to you all soon. Bye bye.